Good morning and welcome to a new week, Africa. It's another day to bring to you Business A.M.'s News Express, brought to you every single Monday morning right here on Africa Business Radio. Of course, Business A.M. is Nigeria's fastest growing financial and business newspaper. Of course, we're taking you through the headlines for this week. And yes, topping the front page this morning, analysts weigh in on Nigeria's economy post the fourth quarter recession exit. Analysts weigh in on Nigeria's economy post fourth quarter recession exit. Positive growth momentum seen in foreign trade, seen in GDP, FX rates to moderate. We have another bullet headline just underneath. Highlights core policy issues to be addressed to achieve all-round recovery. This one's going to be, topic for conversation this morning with the publisher of Business A.M. So stick around. And yes, another headline we have here: food inflation agony dampens Nigeria's Easter celebrations. Traders, consumers bemoan rising cost of food. On and on and on and on. It's all about food inflation. All right, over to the summary section. Electronic transactions hit 158 trillion naira. We have worry over 32.9 trillion naira debt stock coming from the finance and investment segment of the paper. Of course, as at December 31st of last year, the Nigerian state and federal debt stock reflected that the country's total public debt portfolio stood at 32.92 trillion naira. More details on pages 11 of the paper. Nigeria needs its 203 trillion standard cubic feet of gas. That's coming from NLNG now on page 22. Pension assets value down 6.9 billion naira. And we have this one at the transport business segment. AutoCheck launches online truck loans. And my very last mention would be from the commodities and agriculture segment. Nigeria's rice production headache. Yes, this one too. Mr. Philip would have to give us details as well. Good morning, Mr. Philip. It's great to have you on the show this morning.
Good morning, Rachel. Thanks for having me. I hope you had a great weekend.
Oh, yes, I did. I hope you did too.
Yes, I tried.
All right. So let's talk about the very first headline on the paper now, talking about the performance of the country post the recession, the fourth quarter recession exit. We are seeing details here on the paper, and we also see that Business A.M. carried out a survey, based on this. Take us through the numbers.
Yeah, thanks, Rachel. This is very topical in the sense that a lot is being expected this year, especially, again, we look at the post-COVID environment, especially with regards to vaccines rollout and the optimism that has greeted not just Nigeria, but all over the world, that vaccine rollout will present something positive for the world's economy. But specifically for Nigeria, we exited recession in the fourth quarter. Remember, there's a comment, I think, from the IMF yesterday or 2 days ago. IMF or the World Bank, I'm not quite sure now, that express surprise, not really surprise, a praiseworthy surprise anyway, that Nigeria's exit from recession was really, really fast, So given that momentum of what you saw in the fourth quarter, the exiting recession in the fourth quarter, and especially with regards to the rate at which growth was achieved in the fourth quarter, when you compare that with some other economies of the world, you find that the rate of growth was higher across higher than anywhere else in the world. So analysts are looking ahead, and saying, what does this hold for the economy going forward, especially looking at 2021, and there have been some challenging numbers, especially with regard to trade, the Nigeria's balance sheet with regards to foreign trade. We've talked about that some time ago, especially with the negative trend that we were seeing. But here we are we are seeing, especially because Nigeria imports a lot of crude oil. Finished petroleum products from outside, and that costs a lot of money in terms of foreign exchange. So the balance of payments it seems to go against Nigeria a lot. So they are looking ahead. The survey we did was to speak to analysts. To sample a good number of analysts with regards to what their thoughts are. Going forward. So they're saying, okay, here there's a positive growth momentum being seen in foreign trade. Given that we've had a number of challenges with regard to the balance of trade situation. But they are saying, oh, now this what we will likely see. It will be positive, for the economy. So that's one aspect of it. They've also looked at foreign exchange, and they've said, okay, looking at what they call exchange rate, for instance. Exchange rate is such a topical issue because they have looked at the situation in terms of how pressures have come from different parts of, for instance, the World Bank, the IMF, with regards to the way the currency is managed, especially for foreign exchange is managed in terms of having so many, a multiple of exchange windows that through which you can rate the naira. This has not gone down well. It's not gone down well internationally. It's not gone down well locally, because you have people within operators in the economy who have said that this isn't good for business, that it's always better for them to know exactly where they stood with regards to the exchange rate situation, so that it helps them with planning. Again, the world globally, for instance, foreign investors also look at that and say they are confused because you want to put your money into the economy and you want to be able to get returns and then know exactly how much your money will be worth, in terms of the returns that you will make, but that hasn't helped. But analysts are saying that they expect that the foreign exchange rates will moderate this year. Hopefully that will come to a balance in terms of whether a single exchange rate or one that is generally acceptable, for the economy to move to grow, But so they have put some looked at a number of issues in terms of weighing in on growth, weighing in on inflation, looking at FX and then looking at trade in 2021. They've looked at the first quarter, the first quarter that has ended, and then they say they are saying that there's tough policy decisions, that will need to be taken, that for this to happen in terms of for instance, they say, for instance, positive growth is forecast to come alive in quarter 2 and quarter 3. So the first quarter has come and gone. But some analysts are saying that they expect that the second quarter and the growth momentum will start in the second quarter, which we are already on, and then the quarter 3. Prices will continue to rise in 2021. Again, that's inflation. You can't run away from it, Rachel. Inflation is going to be all over the place, whether you like it or not. So that's one of the things that the central bank will have to have its hands on, in terms of so in terms of they think monetary authority to clear the backlog. So they say with regards to foreign exchange rates, so because Nigeria has not been earning quite a lot of so foreign exchange, it has meant that there are people who have a lot of forex to either those who want to repatriate in terms of the profits that they've made, or those who want to buy into need foreign exchange for their trading. So there's a backlog. They expect that this will be cleared, and then hopefully the economy will improve. So there are so many angles that they've looked at. Readers will find that what research analysts have said with regards to foreign trade, that they expect improvement in foreign trade figures, particularly both oil and non-oil export, as demand conditions improve and across the globe. Import will continue to rise. That's Nigeria continue to import generally, of course, it's an import-dependent economy, so that will continue to rise. The ability to reverse its trade deficit in 2021 will depend largely on crude oil production volumes, but Nigeria is tied to the OPEC agreement. We don't know how that will impact on this, but they're saying foreign investment inflows will be higher than the 9.7 billion recorded in 2021, but below the pre-COVID. Of course, COVID is going to continue to weigh in on a lot of things. We'll have to look at this and see how this will impact on their business decisions.
All right. Let's move over to page 11 of the paper, talking about Nigeria's rising debt stock now. This is not a Nigerian thing, Mr. Philip. African countries are currently overburdened when it comes to debt, especially with what happened, throughout last year. Take Kenya, for example. It was part of our conversation this morning during the headlines. Kenya right now increased its public debt by more than 1 trillion shillings in the year of COVID-19 pandemic. What this means is that from March last year, these guys were recording about 121 billion shillings every single month. And before that period, the period to March last year when the COVID-19 started, they were recording about 71 billion shillings every month. This is the number more than doubled. And it's something, going across African countries at this point. And Nigeria is not so different. I mean, we have an alarming number of about 32.92 trillion naira. But analysts are coming out to say that, they actually see a modest burden on debt servicing. What's that light at the end of the tunnel that they are seeing?
Well, again, so you had COVID-19, so you had the government needed to spend quite a lot. But critically was the fact that the inflows were not dried up, but went down drastically. From whether it's from inflows from crude oil, whether inflows from foreign direct investment, whether it's inflows from diaspora funds, diaspora's money coming into the country. So you had a large body of areas where inflows went down. But government still had to run, so of course, you had to, there had to be, that had to be financed somehow. So that's where the debt situation came in, so rising debt, you had to pump in money anyway to keep the economy. You saw the raft of money that was pumped in terms of whether all the intervention situations, policies or that intervention initiatives that were taken by either government through directly or through the Central Bank of Nigeria, pumping money. Those were fund money, that had to be borrowed. Nigeria, in terms of financing the economic activities, especially the federal government, needed to borrow money. So you had money borrowed from the World Bank. Recall that we took some money from the World Bank. Was the World Bank or IMF gave us some money. I think there's still one hanging somewhere. So money has come from different areas. So, but as the concern really, is that when the numbers go up, of course, people need to. Some people express concern, when numbers are rising, especially when it is on the books, it's so is that the left hand side, not the right hand side. When you have it that way, if the left hand side is rising in terms of the debt, not the negative, not positive, then you expect that there will be some concern, but they believe that. There'll be a clawing back of this, especially as the economy again, everything is being linked to what you call the improvement in the economy, that things will improve. so that with improvement that the debt stock will either stabilize. There will be no need, because if the global economy improves, we've seen oil prices improving. That will bring in more money. There's again diaspora fund. You remember there's a policy that has been put out there. To attract diaspora's funding. Funds coming into the country. Hopefully that all of that, and then if there's improvement in economic activities, if there's stability across board, then you expect foreign direct investments to come in. You expect that the economy will be able to begin to pick up in a higher tone than before. And then when that happens, then the economy will in terms of debt, you'll be able to earn more money and reduce debt, and so that's where the optimism is actually coming from. And again, some have said that the approach to the cost of the funds, of the debt, won't be that so high, because the channels through which the debts are being taken are not those what we call what some from private sector borrowings.
Right.
They're borrowing getting concessionary money either from the World Bank or the AFDB and the Exim Bank. The Chinese monies that they are getting are have very low rates. So if Nigeria continue to earn, if the earnings continue to improve, as we are seeing through, we're expecting through the improvement in oil prices, then you likely see that the burden will not be so much, because a lot of the monies that they've borrowed, have are concessionary monies, and they are not. Some of them are not even due, immediately.
All right. I guess we'll have to wrap this up at this point. There are a lot of catchy headlines on the paper today. But just in 1 minute, turn our attention to other headlines readers can look out for this week. In just 1 minute, please.
I will ask readers to look at, especially those who are concerned about pension. There's the insurance section has something about pension. How pension gross asset value dropped 6.9 billion in 1 month. Despite the rise in this retirement savings account. Pensioners or potential would-be pensioners like yourself and myself later on. We should look out for that. There's a need to look out for the story on agriculture. On rice. This is a major staple for Nigeria, but Nigeria has been trying quite a lot to see that they close the gap, between domestic production and importation, but it appears that there's still a challenge here, So there's been quite a lot of what's it called work done in this area to look out for.
All right.
In the paper.
Okay. Thank you so much, Mr. Philip, for joining me this morning. Of course, we'll get back to you on Monday for an introduction into new headlines to watch out. Thank you.
Thank you. Thank you very much, Rachel, for having me.
All right, Mr. Philip Isakwa is the publisher, Business A.M, Nigeria's fastest growing financial and business newspaper.